If the stock market is up, why is your cousin still unemployed and eating instant noodles? Spoiler, the stock market does not equal the economy. Let's talk about this overpriced casino with a TikTok filter. The stock market sounds fancy. Suits, tickers, and CNBC yelling, buy, sell. But what is it really? And why does it go up when everything around us is falling apart? If you like getting punched in the truth, hit subscribe. No yachts, no gurus, just real talk. Stick around to see why Wall Street's eating while you're scraping by. Where it all started. The reason you can trade stocks on your app today starts with a Dutch company, a war, and a genius idea. Let regular people fund risky spice trips. The year? 1602. The Dutch East India Company's got a problem. War with Spain and pricey spice routes to Asia. Solution? They dropped the world's first IPO. They sold shares in coffee houses, like a Kickstarter for pirates. They let regular people invest in ships. You'd buy a slice of the company's fleet, pray ships didn't sink, and if they came back loaded with nutmeg, boom, profits. They raised 6.4 million guilders, about 110 million bucks today. And the dividends? Sometimes literal bags of cinnamon. Yup. They didn't just invent the stock market. They made spice payouts a thing. So yeah, the Amsterdam Stock Exchange was born in 1602. Before Wall Street had suits, these guys had spices and side hustles. By 1610, price manipulation was already a sport. So no, GameStop wasn't the first hype train. But it wasn't all chaos. They built the first modern exchange, transferable shares, limited liability, legal speculation. Joseph de la Vega even wrote a book about it in 1688. Title? Confusion of Confusions, the world's first trading playbook, which is still the best description of the market today. What even is the stock market? The stock market isn't a boat party anymore. It's not a building, or some dude in a suit screaming buy on TV. It's eBay for companies, Amazon for ownership, Tinder, but for your money. So what is it really? It's a system where companies sell tiny pieces of themselves, called shares, to raise cash. You, the investor, buy in hoping they grow, profits go up, and your shares ride that wave. It's a platform for companies to raise capital, without begging banks. It's how people invest their savings, hoping to turn dollars into more dollars. It runs on supply and demand, aka vibes, headlines, and herd behavior. It's a place where trades happen instantly, thanks to exchanges like the NYSE and NASDAQ, fancy alphabet soups where money never sleeps. It lets businesses grow, while letting investors cash out anytime. You don't own a seat in the boardroom, you own a slice of hope. If the company wins, you win. If it tanks, you refresh your resume. And no, owning Apple stock doesn't mean Tim Cook sends you Christmas cards. But here's the wild part. This whole machine doesn't price what's real. It prices what people think will happen next. It's a future predictor, not a financial mirror. So, yeah, the stock market isn't just numbers on a screen. It's the biggest hype machine in capitalism, where dreams get funded and FOMO fuels the engine. When people say, the market is up, they're not talking about your wallet. They're talking about indexes like the S&P 500, a hype-powered scoreboard tracking giants like Apple, Microsoft, and the one selling you 48 rolls of toilet paper for fun. Hi, Costco. How the money actually moves. You hit buy on your app, feeling like a Wall Street wolf. Wrong. Reality? Your money takes a scenic detour. Broker, like Robinhood or eToro, offers free trades. Then it goes to an exchange, NYSE and NASDAQ, to match your order. Then a clearinghouse, the DTCC, settles the trade. Then a custodian bank holds your shares. And everyone grabs a slice like it's a mafia pizza shop. Investment banks? They charge 5 to 7% fees on IPOs. That's billions just to list you on Wall Street. In 2023 alone, IPO underwriting fees hit nearly $8 billion. Then they lend you margin to buy those same stocks, collecting billions more in interest. U.S. margin debt, $1 trillion. Market making? Pulls in close to $10 billion for big banks, just by pocketing the difference between what you pay and what the seller gets. And that free trade. Robinhood hands your order to hedge funds for pennies, then pockets nearly $3 billion from high-frequency traders just by routing your trades. You're not the client. You're the product. So no, you don't pay a fee. You just donate your soul to Wall Street's snack tray. Wall Street's total haul? Over $50 billion in fees, interest, and trading profits. More than Iceland's entire GDP. The stock market does not equal the economy. People say, the market's up like it's good news. Meanwhile, your rent's late, and your boss just cut your hours. Let's unpack the delusion. The economy? That's your local bagel shop, your barber, your barista. The stock market? That's public companies. And while giants like Apple, Amazon, and Tesla get the headlines, they're just the tip of the iceberg. The bagel shop on your street? Not in the market. But it is in the economy. Hiring people, paying rent, making carbs. 58% of Americans own stocks. Yet we act like the S&P 500 is the new Bible. Small businesses make up 2/3 of U.S. non-farm jobs. And yet they're invisible on Wall Street. Everyone says, stocks are up. The economy's booming. Really? In 2020, 20% of small businesses were gone. Unemployment hit 14.7%. But stocks, the S&P 500 soared 30% that year. Why? The Fed printed $4 trillion, and investors went full YOLO. Welcome to Clown World. The stock market is forward-looking. It prices in vibes, not facts. Will Tesla actually deliver cars, or just promise Mars trips and maid robots again? The economy? Backward-looking. How many people were jobless last month? By the time we know unemployment is up, it already happened. Plus, the market only cares about public companies. Your local taco shop doesn't even exist to Wall Street. But it does matter to the economy. Are the stock market and economy connected? Sure, like X's at Thanksgiving. When markets crash, companies panic, cut projects, and lay off workers. When stocks rally, they raise money, hire people, and buy espresso machines for everyone. It's a weird loop. But one doesn't guarantee the other. Buzzwords to not sound like a noob at brunch. Finance has its own language, mostly to confuse you and sound smart on CNBC. Here's your cheat sheet for cutting through the BS. Bull market. Everything's going up. Investors are drunk on optimism. Technically, a rise of 20% or more from a recent low. Bear market. Everything's going down. Cue the panic, tears, and viral Twitter threads. Technically, a drop of 20% or more from recent highs. Market correction. Finance speak for oops, everything was overpriced. Liquidity. How fast you can turn something into cash. Spoiler, real estate. Not liquid. Stocks, super liquid. IPO, a company's big debut on Wall Street. Basically, it's red carpet moment. But instead of fans, it's bankers with calculators. Dividends, when companies toss you some pocket change for holding their stock. Most U.S. companies that pay dividends yield around 1 to 3% per year. Market cap, what the market thinks a company is worth. It's not always tied to reality, just vibes. Index fund, a bundle of stocks you can buy all at once, like a Spotify playlist of top companies. S&P 500 index funds hold around 500 top U.S. companies. Passive, but powerful. Now, recap time. The stock market started with spice boats, turned into a casino for suits. And now, it's a hype machine run by algorithms, where momentum beats logic and vibes move billions until reality finally punches in. The economy? That's your paycheck, your rent, your small business neighbor just trying to keep the lights on. When that collapses, TikTok traders don't feel it. Your grocery bill does. The stock market bets on tomorrow. The economy pays for today. Still want in? Cool. Just don't forget, the house always eats first. Final call. Want to stop being played by headlines and TikTok traders? Hit subscribe button. It won't lower your rent, but it might explain why stocks are up while you're broke. We've got more no-fluff, fun takes on personal finance, investing, and building a smarter life. No yachts, no gurus, no magic. Just real talk. See you in the next one.